Good morning, good morning. How's it going, guys? I just looked at the title and I titled today for November 3rd. Oh man, I'm still in yesterday mode, I guess. Crazy. Anyways, I'll change that afterwards. How's it going, guys? Good to have you. Beginning of the week. Beautiful. It's going to be a big week today. Gosh, have you seen the data that's coming out? Woo! Wow, action packed. Let's take a screenshot of that. Well, I could bring it up. My FX book. And we can have a look at it together. Where is it? Economic calendar. Take a look at this, okay? Action packed. Lots of stuff. Okay, so for today, interest rate for the Aussie coming out. Presidential election on Tuesday. Big news. A lot of speculation as to how the market's going to react from that, but I have my own opinions as you probably know, I've shared them with you before. The market's going to do what the market's going to do, okay? There is no Trump wins and all of a sudden the dollar starts to rally out of nowhere when nobody saw it coming. That doesn't happen, okay? Wednesday, not much going on there in terms of market shattering news. We got the Fed interest rate on Thursday. That's important. And we got the pound as well on Thursday. So that will move the markets. And what else? That's about it. Okay, cool. So we got the dollar, we got the euro, we got the pound set to make some moves. So that's important. Now, one thing I will point out, okay, a lot of people are like, oh, this happened and then, oh, what a big spike in the dollar. This news came out, what a big spike in the dollar. And it seems as if it was caused by the event. It seems as if the move came out of nowhere, but that's not true. That's not how the market works. It didn't come out of nowhere. The thing is that it came out of nowhere for those people because they had no understanding of what was taking place in the market leading into the market. Okay, that's truly the situation. But if you understood how the market actually worked, then and you understood the circumstances that the market were in before leading into the event, then there'd be no surprise that the market did what it did. So we're going to look at the markets today. We're going to just give you a brief overview of what is currently playing out in the market so that when you see the reaction in the markets from the news and from the election and all that stuff that's coming out this week, you'll see that price is just continuing on the journey that it was on before the event, okay? So the first thing we'll look at here is the S&P. The S&P in the week on the weekly chart, when we look at this, we can see that we have an uptrend here, okay? I was pointing this out last week to members. We have an uptrend. We're always looking at structure. Very important. Why are we looking at structure? Because the institutions create structure, okay? And based on what type of structure they're creating, we have a good indication of what they're likely going to do with that structure. What are they going to use it for? Sometimes they use it to set up retail traders to lure them into trading and doing the opposite of what they want to do. And sometimes they create structure and trends so that they can continue buying after they drop price down into institutional demand areas. Okay, and here we have a trend to the upside, and we have price sitting inside an institutional buying zone. Now, it's not the highest quality zone, but it's still a zone, and it's something that we should be paying attention to, and we're inside it. So the weekly chart represents medium time frame, okay, a medium time frame. Long time frame would be monthly, very long would be above that. Short term would be, daily, 4 hour, and then very small time frames below that. So when we look at the weekly chart, we see that we have an uptrend and price is inside demand. Medium term, we are seeing bullish pressure, okay? You have to see it. There's no other way about it, okay? When a demand zone on a weekly time frame and you have a weekly uptrend is in play, that tells us that pressures to the upside. The only time you should be thinking anything different is if that area of demand were to be removed. Okay. Now, there's ways that we can tell whether or not the banks are going to use this area to continue pushing the market higher. We have to look at the lower time frame and look at price structure being created off of this area. But when you just look at the weekly time frame and you see something like this, we have to conclude that the pressure is going to be to the upside. So, you know, there's a lot of talk about how the market's going to react if Trump wins. Some say it's going to be very positive for the market. I mean, I was just pointing out an article the other day. Let me bring this up. I think it's important. And how the news helps to put ideas into people's minds. Okay. Now, here we had an article from the Wall Street Journal, and I pointed out some pieces here that I thought were important. One was this one. One widespread view, and if you're wondering where I'm reading, it's right here. One widespread view on Wall Street holds that an already large federal budget deficit could get even bigger in the coming years, especially if a win for former President Donald Trump next week is coupled with gains for Republicans in the House and Senate. A bigger deficit means the government needs to issue more bonds, which can weigh on the prices of existing treasuries. Interesting. Another thing I've read is stock markets will go up, dollar will go up, because last time Trump was in office, this is exactly what took place. Dollar got stronger, markets got stronger, and there's all these reasons why. And just this morning I was reading another article that was suggesting the opposite. So it's kind of confusing, right? But I think the overall idea is that if Trump comes into office, it'll be good for the dollar and it'll be good for the stock market. Okay. What I'm telling you is it doesn't matter who comes into office. It doesn't matter. If this area of demand does not hold, price drops. Period. Okay? Because let me put it to you this way. If Trump comes into office, banks aren't sitting there saying, "Ooh, I wonder who's going to become president." Okay, guys, get ready. Get ready. Let's see who becomes president. And then when we find out, we'll take action in the markets. That's not how the world works. I know the movies portray it like that. I know the media portrays it like that. But you take all that aside and you study the markets, okay? Just put all the media aside, put all the movies aside, all that nonsense. Just study the markets, and you will see it doesn't work that way. Especially when you look at the CFTC data, you can see the positions of the institutions leading up to these events. So when months and months before the Russia invades what is it? I was saying Kuwait. Remember that? When Russia invades Ukraine, months before it, the institutions were accumulating a gold position. Massive. I've pointed this out before. If you haven't watched our YouTube videos before where I've pointed this out, you should go back and take a look during that time, the videos that I was doing, because you should see exactly what took place. The banks were accumulating a gold position before, months before the invasion. And then when they accumulated such a massive long position in gold, where they were reaching their maximum size, guess what? Putin invades Ukraine. And then the media plays it out like, "Oh, this Putin, man, you never know what this guy's going to do. He's such a bad guy. And we got to go and we got to solve problems." You know what the banks did? They used that as an opportunity to offload their gold positions. Why? Because the media was like, "Oh, there's going to be a war, and gold is the safe haven." So It was the perfect setup to offload those long positions to unsuspecting retail traders that were like, let's buy gold because there's a war. And then guess what happened? Guess what happened months after that they bought the gold? Gold tanked. That's right, because it was part of the whole plan. When the banks are not there to support gold, it tanks. Doesn't matter how many retail traders are buying it, it tanks. The only people that can support a market are the banks, okay? The big institutions that work together like a big mafia. All right. So this is what you should focus on, is that demand zone, because that's all that's going to hold price up. Not an election, not anything else. Okay. So I'm watching that. Now on the daily chart, when we take a look at what's going on here, it's already started to break its ascending structure. Okay, slowly. Let me point it out for you. Here we go, broken uptrend. Here is what we had, an ascending structure right here, okay? So this ascending structure, the only way that it can be fully supported for a short-term move to the upside to bring in short-term momentum is if the institutional demand area that was created right here was to be held. And it wasn't held, as you could see. It's been removed. Why is that? Because they don't have an agenda to keep this structure to the upside on the daily time frame. Meaning the short-term momentum is no longer up. So as you can see, the break of that trend line is happening here. Okay? We're stalling right at a demand area. But that's because on the higher time frame we have the weekly demand zone here. Okay? So what's happening is on the daily time frame, the structure is no longer reliable. Okay? We're left with the weekly. So the focus should be on the weekly time frame. That's where your main focus should be, is on the weekly time frame. Okay? All right, now with that being said, you hopefully watched the video that I just posted over the weekend on the CFTC data. If you haven't, go watch it. It's super important, okay? Because this will tell you the story of what is taking place. What are the banks doing with their positions? What's the sentiment? And if you paid attention, a lot of the sentiment on on the currency pairs are neutral. The sentiment is neutral, all right? So if you're wondering why there hasn't been any significant moves in the market, it's because the sentiment is neutral. On some of them, they're not. And, you know, we have US dollar, Japanese yen that just came off the lows. Why? Because the banks accumulated a massive short position, and then you need to offload those shorts, so cause the price to go up. We have US dollar CAD that is hitting supply, reaching near max long positions for the banks, and retail traders are underwater on shorts. That's a recipe for a drop. Okay? And I've already placed pending orders into the market, and I shared that with members. But get ready, it's dropping. USCAD is going to drop. So, so there's a lot of things taking place, a lot of things setting up. And there's a lot of also neutral sentiment. So here we go. Here's the USCAD, right? And as you can see, I put a little label here. The bank's maximum position on longs is 219, which they reached here. At where? Where was it when they reached that? It was at a supply zone. Okay? Institutions use supply zones to get into short positions, and they use them to offload long positions to take profits. That's supply and demand working for you, okay? It's amazing. It's amazing. Now price is reacting from another daily supply zone. But right now we're at 194,000, okay? Not at the 219 that we were previously. 194 is still up there, okay? Does that mean that they can't continue putting on longs? No, it doesn't mean that they can't continue putting on longs. It's just very unlikely. So now we switch to the 1 hour chart. Why do we do that? Well, because we want to see if there's a momentum shift taking place off of this daily area of supply. Because if they're going to start to offload long positions, what they are going to do is shift momentum to the downside. So I placed a trend line here on the 1 hour chart, and I see the break of it is not really that good. You could say, yeah, the trend line broke with this candle here on the opposing side. There was no space here. There you go. There's your supply zone right there. There's your short-term 1-hour supply zone in play, playing out to the downside. So if you were a member of the school and you know the rules and you know what to look for and you know how to dial down onto the lower time frame to look for your trades, we have a short bias on USCAD. We have supply being hit, retail traders underwater on shorts, banks over exposed on the long side, needing to take profits. This is all set up for a move to the downside. We're hitting a daily supply zone. We dial it down to a 1-hour, watch for a momentum shift, and boom, there's your entry. All right, so it looks like it's already up maybe 1 to 2 on that trade. Really good. Hopefully some of you got that. And so let's go back to the daily time frame. What do we have here? So USCAD likely going to drop. I mean, there's no other way around it, and we're seeing that weakness coming in here. Short-term momentum shift. This could easily continue. My short-term target would be daily demand here. Okay, price is going to drop. Contact this daily demand. Daily demand starts at 138.48. So I'm expecting an easy drop down to here. Okay, easy. Do I think it can continue? Yeah. Look at the last time they took profits. Okay, you see how much of a drop? But at the same time, if you look throughout this move, there were no demand zones to the left of price to stop price from dropping. Okay, that's why it easily dropped like that. The only time it came into a demand was here, but if we zoom back, we can see that it had already been somewhat tested here and here. So demand had already been absorbed from that area. This demand zone, on the other hand, has not been tested yet. That's fresh demand. That's the institutions buying to get price up to that area of supply. Do I think it's going to keep price from moving further? I don't think so. I think this is going to act as a speed bump. Price is going to come down, slow down, and then eventually go even lower. So down here, 136.50s, give or take, I think is a good medium-term target, okay? Considering the move that we got last time, I think that's a good medium-term target. So with that being said, remember, with that being said, what is this? What is the theme here? What's the theme that we see here? This is why I call one of my trades theme trades, okay? You walk into a room, people decorate their room, there's a certain theme, right? African theme, or you watch a movie and there's a theme for the movie. What's the theme for the movie? It dictates the vibe. It dictates what is taking place there, what you experience. This is why I came up with the concept of the theme trade, is because I'm looking at the charts and what's the theme here? The theme is profit taking on longs, retail traders underwater. That's going to force price to drop. That tells me the dollar is going to be weaker. Dollar is going to be weaker. So what's going to be stronger? What do we know to be true? If the dollar is weaker, what's going to be stronger? The euro. The euro is going to. Oh, and look at the euro. And look at the euro. What do we see when we're studying the charts? Remember, we had an institutional supply zone here that was contacted last week. Okay. Remember the move to the upside that I forecasted in our Telegram channel? If you haven't seen our Telegram channel, you got to go there. There's links on our website, whiteoakfx.com. Scroll to the bottom, you'll see our links there to our Telegram channel. If you're not getting the analysis, I don't know what to tell you. You shouldn't be trading without getting our analysis. That's my opinion. We forecasted the move down from the lows here to the upside. It contacted supply and it dropped. Now look what's happening. That drop didn't take price very far, did it? And now it's coming back to attack the supply zone. I mean, with my experience looking at this, what I could tell you is that it looks like this is going to be removed, which is going to open up the chart for a move higher. Okay? That's what I'm seeing here. Once this gets removed, a move upwards like this. And didn't we just say on the USCAD we're expecting a move to the downside, a certain amount? Right. So the technicals are suggesting a move to the upside. The CFTC data is suggesting a move to the downside on the dollar. Retail positioning is suggesting a move to the downside on the dollar. So there's a lot of things in line here. Now, do we see this correlation across the board? Meaning, are we seeing, when we look at the CFTC data, the same things with every dollar pair, dollar leading pair? No, we're not, okay? But we have to understand that some of them are in neutral phase right now, okay? It's like the banks have their engines on for certain markets and the other ones are in idle, okay? And this is not unusual. We see this all the time, where the banks are focusing on certain key pairs, and once they make the moves on those pairs, then they take the gas, they take the pressure off the throttle, and they go over to other markets. So I'm not very concerned about all the markets being correlated at this point. What I'm watching for is where are they putting the gas on? They're putting the gas on the euro. They're putting the gas on USCAD. Those two are for sure, okay? And so this is what we're seeing here. So whatever happens this week, just keep in mind what is starting to progress here, okay? What's starting to progress? A move upwards on the euro, a move downwards on the USCAD. The S&P 500 is inside demand, okay? And let's take a quick look at gold. Let's take a quick look at gold. Gold's inside demand. Doesn't gold and the euro tend to move in the same direction? Usually. And what are we seeing? We see supply in play on the euro, and we see demand in play on gold. So what does that suggest? Well, you'd probably be thinking, well, doesn't that suggest that they're going to go in opposite directions? No, because we just determined that that supply area on the euro is likely to break because it's being tested for a second time, right? So I would not be surprised if gold heads higher from here and if the supply breaks on the euro. Okay? Okay, so that's what I'm watching. That's what I'm looking at. Let's take a look at silver. Okay, silver is hitting the ascending trend line. We were talking about this. We have institutional demand right here. Trend line is still intact, holding price up. If gold goes up, silver goes up, likely. Okay. So this is what you got to know. This is the setup. This is what I'm seeing. I know I'm going a little over what I normally do, but I think this was important stuff to lay out for you before all this data and all this information comes out. Because now that you're prepared and you know what to watch for, all you have to do is watch the data and see the reactions in the markets. All right? Good stuff. Please hit the like and share button. That'd be nice. The more you like, the more you share, the more we get this word out to other fellow traders just like you. And I'm sure that they would appreciate knowing these things before they get caught doing the wrong thing. All right, folks. All right, that's it. I'll let you go. And I have a class, a level 1 class that we're going to be doing for members in about 35 minutes. So I'm going to have to start preparing for that. And if you're a student, make sure you get your homework sent in. You got 35 minutes to finish that and get it into me. And that's it. Enjoy. Thanks for joining me this morning. Always a pleasure, and we'll see you guys tomorrow. Take care, guys.